copper is the new oil, because it's the driver of the new world's economy. You're seeing technology companies now in the energy space, and I think you're going to see them very quickly in the mining space.
Let's say gold hits $20,000 an ounce in the next 5 years. What does that imply?
Well,
commodities, in particular metals, are on fire. Not literally, but the prices have moved to historic highs. Gold above $4,000, silver just under $50. The historic $50 only happened twice in history. What happens once we breach that mark? Copper as well, making a bid, up about 25-27% year to date, climbing a lot in the last couple of weeks. Ian Harris joins us once more. He is the CEO of Copper Giant, and we'll be talking about what's next for metals investors. Everyone wants to know, Ian, welcome back, by the way. We spoke a couple of weeks ago in Beaver Creek. Everyone wants to know whether now is the time to take profits or this is just the beginning. I think this is the crucial question. And of course, people want to feel bullish, but we have to be realistic. So let's give a realistic outlook. By the way, your stock, since we spoke a few weeks ago at the Precious Metals Summit, has climbed. So we spoke, I want to say 13th of September. Yeah. We released a video like a week and a half after that. Anyway, since the conference, your stock is up 77%. Well, let me just start with that. What happened? Because copper is not up 70%.
I think it's something we talked about. First of all, that when you, I don't know if it was out part of the video or me and you just joking around. And I said people are wondering if this is
people like your jokes. That's what micros. Yeah, that's what the investors like.
I said, "What are you talking to day traders?" And because I mean, for people that have been around long enough to see the last bull market and how these cycles work out, we're in we're in the first innings. Like it feels like we're in the very, very beginning of it. Equities are still way undervalued. Where the gold has started, where it can go. If you look at the last big cycles, it really is just in the beginning and can continue to grow. I think we're just beginning to see real interest in both the equities and the commodities, and I just think we're just it's these markets are cyclical. And that means something. It means every so often we go through these cycles, and I think the secular bear and bull markets, are around a 10-year period. So we're really just in the very beginning, very beginning.
The reaction I get, Ian, when I show people charts like this, not just your stock in particular. In fact, it wasn't your stock that I showed. It was some other metals, gold and silver in particular. But if I show people a chart like this, they say they get scared. And I say, why? Shouldn't you be celebrating? Well, no, because it's run up 70% in 3 weeks. That scares people, Ian. What's going on? Like, why are we seeing this rush of capital now?
I have had that conversation with somebody today because, we've obviously, especially in the silver space, there's been a narrative for a very long time, and now it's coming out. And you could say the same in gold. You could say the same. Friedland said, came out. I've been saying it for 3 years. It's finally happening. But now that it's happening, it is a little nervous, and it does make you a little nervous. But we'll get through it. But others have said, these type of markets transition wealth from one set of hands to another set of hands. So instead of being scared, I think we should be proactive. And I never answer your question. Why are we up so much in a very short period of time? I think we came off of at a pretty big bottom, to be fair. But the others, what we were talking about, you saw all this money running into gold, and actually the GDX at the time was up 90%. I think it's over 100% now, and the GDXJ also. Then you see this big run in silver going on, and that was happening right at Beaver Creek. And so you're seeing a whole lot more attention, and so new money is flowing into the market. There's also some people made a lot, and they're going, okay, what's the next thing? And money is coming into copper. And I've been saying it for a long time. We've hit so many milestones on the project that we've already hit the catalyst. The only catalyst that was waiting for is a little more momentum in market, because the valuation is underpinned at a much higher level. So I just think it's the attention's there. There's wind coming out, and the good projects are doing well.
Here's the thing. Let's talk about copper. Copper overlaid with silver. This is what I've done now. Silver is the blue line, copper is the bar chart. You can see a very close correlation. They kind of move in the same direction. I'm going to ask you to explain why that is, by the way. And of course, you and I already talked about this big drop in the COMEX in copper. It's the arbitrage price got adjusted. It didn't happen on the LME. But anyway, you can kind of see that they move in the same direction. Now, silver's had a huge bid. I mentioned almost $50, $49, $48 is right now what's hovering around my screen. I wonder if this is going to lead this next move in copper. Like I said, they moved together. Silver's just run up a little bit more in the last couple of weeks.
Yeah. So first of all, silver's schizophrenic, right? It's a precious metal, but it's also an industrial metal. And you could argue today it's more of an industrial metal. So I would also argue that the investment attraction to silver, believe it or not, even though it's gone from $20 to $49, right, in a short period of time, if you look back a little, I mean, but from the beginning of the year, from $30 to $49, that is a huge move. Um, it isn't from investor sentiment yet. It's not from, you haven't seen a pouring into to the ETFs until recently. You haven't seen people buying more bars until recently. And so that means it's been driven by industrial demand. Now,
Yeah.
I think we're on it. We're going through a switch. It's going to go when people are going to go, wait a second, this is an amazing. And then you'll see more people plowing into it from an investor perspective. The people that are newer to the game. I had a commentary this morning. It's like when the Yankees finally win the World Series. And it's been 20 years, and that fan for 20 years is like, I told you so. And then all of a sudden everybody's wearing Yankee hats, right? I mean, there'll be new money coming in and from an investor perspective. So the reason it goes so par and par with copper is because industrial has been the biggest drivers. You'd also argue it's been the perspective of the traders, whether it's short term or long term. And I think, people, the writing is on the wall, right? We're coming into a world where you know, it's about metals, right? It's about the metals, either from the protection from fiat currencies, overspending, to it's the new copper's the new oil, because it's the driver of the new world's economy. So it's a very, very interesting time, and I do believe. Yeah, okay. It'll be jitter, it'll be up and downs. Rick Rule talks about you can be in a 10-year bull cycle and still have 40% down sometimes. But overall, it's, these are 100. There's companies out there that have 1,000% gains this year. Right? There's big, big gains. So the tension is coming back into the market.
I want to come back to your statement, copper is a new oil. Let's talk about miners first. Overall, GDX, this is the gold miners index. I know it doesn't really include copper and base metals specifically, but it's up as a proxy for all mining stocks. It's up. It was up 90% when we spoke 2 weeks ago, 4 weeks ago. Now it's up 132%, Ian. Year to date.
I was off. I said it's probably up over 100 now, but it's 145. Look at that. It's just accelerating.
What is happening with fundraising, capital raising, and financing right now? We spoke a month ago, and you have mentioned that it's starting to pick up. And I've talked to people like Kai Hoffman, who tracks financing through his Ornick index, and he's been saying that, well, capital has been raised all throughout the year. It's been accelerating, so it's not like a new trend. I wonder if it's coincident with this rise. In other words, have you seen an acceleration in financing over the last month and a half?
Absolutely. And it's not just an acceleration. You've seen so many deals come out that are these life financings that have been supersized really quick. And it's sort of like the beggar who's been waiting for this longest time, finally getting some money. And then it's this reaction of hoarding a little bit, maybe it seems it. But you also see a big change in who can participate in those financings, right? It used to be a lot of best efforts, and people could call up their broker and participate, and those days might be over, right? Everybody's been praying for a bull market, but it also means the days of these kind of financings are also over, where it's going to be going into stronger and stronger institutional hands that will be participating. So it's not just how much money has been raised, it's where the money is coming from is also changed dramatically. And in a month, and it has been in a month, it's getting big. And so that's also, we get a little scared in terms of what's going on, is getting overheated, but you're seeing big players, big institutions that are putting down money, that they're seeing this as a longer term trend.
Well, what do you say to people who make the critique that not just your stock, but the entire sector, the entire resource sector, and to a certain extent, the metals themselves are currently in a bubble right now, given how fast they've moved in such a short period of time? The fundamentals of the economy haven't changed that dramatically in the last 7 or 8 weeks, but the price has moved exponentially higher. And so when that happens, critics would say, that's a bubble. What do you say to that?
So I would argue it depends on your perspective of time, right? I believe that we're in a secular bull market, the very beginning, and that's 10 years, right? So we might have corrections within that bull, but you could also argue that very easily miners are still extremely cheap. If you look compared to historical levels or compared to how much gold moved and how high it got before the equities ever moved. So a lot of it might be a correction, the opposite direction. It's a positive correction because the stocks have been so undervalued. I would argue if there's any sort of correction, it's going to be very short term. And I'm not a finance guy. I'm a mining engineer, right? So I have a tendency to be more conservative than most, right? But we've seen it for so long, the undervaluation and the underinvestment, the lack of discoveries, the lack of new supply, the longer it takes to get everything is happening that indicates at the same time when you're having a breakdown of the globalization of the planet, which means less efficiency, meaning you need more asset. So assets become a whole lot more attractive. It's all happening, and I think it's just beginning to play out. Just the
So
very
when
beginning.
so when you go to, let's say, an investor meeting and you pull up a copper chart and you show the price appreciation and the growth of copper over the last year, not just the last year, over the last 5 years or so, investors ask you, how are you as a company capitalizing on this trend? And by the way, you have a multi-year target of $10 per pound, which is double from here. We'll get to that. What do you say to that? How do you as a company add value and beat copper in an environment that's bullish?
So by nature, normalmente, I'm now switching to Spanish, sorry. Normally, right, we the reason that people invest in these stocks is because they normally trade to a beta, right? Now, where's our specialty? And I'm talking now as the CEO of Copper Giant. Have the pleasure to work with Ernie Mast and others who are professionals at developing project. And new joined us Mark Gibson, who came on the back of both Ivanhoe Electric and Cordoba Minerals in Colombia and getting one of those projects actually advanced. But Ernie and myself being involved in two of the six big copper mines that have been built over the last 10 years. So we look at what is a project that is going to be built, right? So that it's not a discovery, it might be a resource expansion play, but we're looking on how to build a mine. And that's where we're going to leverage more because I think market is very inefficient at actually picking the winners of who actually gets built. So we are going to be able to demonstrate by breaking through and de-risking a very important project that we believe will be one of the next big copper projects on the planet. And so that's how we're going to provide value because we're extremely undervalued today. We're trading for zero point 0.2 cents per pound in the ground versus that chart that says $5. So as you get towards moving towards it, converting it from being underground at zero point 0.2 cents and out of the ground at $5, right? That is a lot of room to be able to create significant value for shareholders. And that's how we're going to do it.
This is going back to your earlier statement about copper being the new oil. Tech companies are spending $36 billion on average over the past 4 quarters. This is according to the World Economic Forum. And the quarterly average for a typical S&P 500 company is only $2 billion. So they're spending on the order of almost, more than 15 times the average S&P 500 company. A lot of these are hyperscalers building data centers, as you know, and hyperscalers are investing in not just the software, but also the physical infrastructure. Nuclear power plants. Microsoft is restarting nuclear power plants, off-grid power, and of course, all that infrastructure needs copper. I wonder if copper is then going to have its own narrative into the future. It's going to be decoupled from stocks, from the macro picture, from silver, and it's just going to trade on its own, dependent on this infrastructure boom.
Well, the last time copper ran big time was on the infrastructure boom of China alone, right? Now we have an existential crisis, right? So, and I try to explain it, and it sounds like our conversations are having a little bit of influence on you because you're seeing it too, right? That this isn't projected spending. This isn't like, oh, we're going to convert everything to electric vehicle, which would be extremely bullish for copper. But it's more this technology drive that's insatiable. Everybody's like, Microsoft, I'm going to spend 20 billion. And then Meta goes, I'm going to spend 30. And then, the Alphabet comes out and go, I'm going to spend 50, because they all realize that in order to win, they have to be ahead of the competition. So they say, it doesn't matter how much we spend, right? It's how much we gain and getting to the finish line first, right? So it's all about accelerating. This is only going to get faster, and any barrier in the way. And some of the biggest ones, you talked about energy, but it's these minerals. You see Donald Trump going to Australia and talking to 30 different companies for critical minerals. Right, you see tariffs that are to incentivize new smelting inside of the United States. It is a
That's right.
competition, right? And you see this going on. It's happening, right? So when we look back at this and we go, wow, was that 60, 70%, 90%, 145% gain at the beginning of this? Was that a bubble? No, we're in the beginning, right? There's nothing in comparison to, I think it's just the very, very beginning. And you could easily say we're still not even close to where we should be properly valued, let alone in things getting too hot.
Just on the smelting front, you mentioned to me last time that China controls 60% of global smelting. The US, India, and others want their own smelters. They're not at the same level as China. Now, the issue is we have this demand. We're going to have more demand. Not only do we not have the supply to keep up, we don't have the smelting capability in the West to keep up. So industries, if we have that choke point, industries will have no choice but to find substitute for coppers, right?
Well, sometimes for some things there just isn't a substitute. So, so much of the infrastructure backbone is based upon copper-based products, right? So you can't just pull one out and put something else in, right? It changes completely dimensions. So I think the other way. I think if you look even at the tariff that was, remember that big drop is the COMEX. It was the arbitrage price between LME and COMEX when they said, "Oh no, well, we're not going to put a tariff yet." There's a big word in that in Trump's decision, yet, right? And it was basically 2 years no tariff on refined copper, which means you have 2 years to build refining capacity in our country, in the United States. We're going to be building infrastructure here in the United States. And so I think there will be the move to avoid substitution, right? At all costs, because it's very painful to substitute, but the political risk is too high to not do it domestically right now, right? And I like using the old adage that Elon Musk one day woke up and said, "Uh-oh, I need a lot of copper for my electric vehicles, to make my electric motors, to make my Teslas." I get all that from China, but China's got this little company called BYD that's beating my pants right now. And one day they might not sell me copper anymore to make my stuff. And then I'm going to go, well, sell me some electric motors. And they're going to, no, I'm not going to sell you that either, but I'll sell you this nice little BYD. Right. And so then he goes, oh, I need to buy a mine. And so I'm going to need Twitter. So I bought Twitter just so I could convince everybody how important it is to buy a mine. Because even back then, 2 years ago, he would only talk about lithium and his share price would go down. And so all these concepts are all working out. People are, there's really a race to go on about securing supply chains. You can, but it's very difficult to make an efficient electric motor that doesn't catch on fire made out of aluminum, right? So it's very hard. It's very hard to substitute copper.
Yeah, they have to completely change the way the design works, change the voltage, everything. By the way, I've heard that theory that Elon bought Twitter so he could promote a bunch of stuff.
I don't know if it was his first reason, but I think it was one of his reasons that he realized he needed a marketing arm.
Yeah, or convince people to cancel Netflix, but that's a conversation for another time. Now that the stock has run up, now that copper's on a tear, now that the entire resource sector is all the hype, give me one or two things that are keeping you up at night and how you're mitigating those risks.
Well, the biggest one for me, the one thing that keeps me up is we're still early in this, and we needed to get a little bit more healthy, right? Where even the valuation of Copper Giant is way undervalued of where it should be, and where we need to be raising capital at. And so, if you look at, I'm looking very, very micro here, not macro. We have presidential elections coming up in May. You're going to have a new president coming in August in Colombia, and I want to be able to show him at least a conceptual idea of what this project could look like. And that means more drilling, more engineering, and more work, and more capital in order to time that perfectly, right? I, it takes a unique set of things to build a copper mine, right? And I remembered in Ecuador, it was a window of time that got two of the biggest projects, that got the two big projects in the country built, right? It was only two of them. It was Fruta del Norte and Mirador. But you look at Cobre Panama, it was the same thing. There was a window of time that there was the political will, there was the capital was there, everything came together. So it's all about getting that timing right that I spend most of my time thinking about. And my biggest hurdle right now is continue to get that valuation up of where it should be. Those are the big things that keep me up at night. The other is, what should I be investing in metals or shotguns and farmland if gold hits to $20,000 an ounce? But that's a different story.
Hypothetically, I'm not saying it will, but let's say gold hits $20,000 an ounce in the next 5 years. What does that imply?
Well, if it's gold, and remember, I'm a copper guy, right? So, but I'll give my 2 cents. If it hits that, it means that people have lost faith in fiat currencies. I mean, it's basically what it means. Or this planet is very good at creating real bubbles, and it could just be a bubble because it's going up and everything else is going down. But there's another other thing that if you have gold at a record high, and we're talking big numbers, right? So gold, but so is the Nasdaq is up. So are U.S. markets are at an all-time high, right? And at the same time, Bitcoin is at an all-time high. So where's all this money coming from? What is all the money that's being injected into the system? Right? Because you got to say follow the money. So everything can't be all high at the same time unless you're creating new money. But you could argue that a lot of people have been sitting on the sideline and sitting on cash, especially post-COVID. I mean, you can just look at Warren Buffett to say who's been accumulating cash. People have been afraid, and now they're going, now I'm afraid of the US dollar. And I'm afraid to keep my money in the US dollar. Could argue that Bitcoin and perhaps even the US markets, it's the last little end of the party that people are participating in. But the bigger move is from cash into gold, because it hasn't been from stocks into gold, hasn't been from Bitcoin into gold. So it has to have been from cash into gold. And so that means that people are losing faith in fiat currencies and what's going on in the debt in the United States.
And actually, if you measure the S&P 500 relative to gold on a gold adjusted basis, it's actually down year to date. If you measure,
when you've had a pair of 50+% in 1 year, and look at over a longer period of time, it would be more interesting because you could argue gold's just catching up, right? It's had a
well,
we'll
so you mentioned that you would like to raise money at a higher valuation than even what Copper China is trading at now. What kind of a deal structure would you accept from Alcoa if you were to raise money for that project now? If you had to do it now, would you accept a royalty streaming? Would you accept offtake or strategic equity or something else? What is an appropriate cost of capital for you?
Yeah, I think it's inappropriate the project time frame to be looking at anything like royalties or streaming. Right. Now, a strategic partner because of offtake, and by the way, it's one of the world's largest moly projects, and it looks after our new metallurgical test work. About 30% of the value of Macoa now is moving towards moly because moly prices has appreciated way faster than copper, and our recoveries have gotten way, way better in the updated test work. So that's an interesting play because that's a strategic metal and a strategic partner in that perspective. I think ideally what we're looking for is the right partners. And fortunately, to get the right institutions, you need to have at least $100 million market cap normally to get their attention. I think we're extremely undervalued and should already be there, right? But we need the market to get there. So it's really getting the right partners, long-term partners, strong partners into the project. The next stage is kind of my biggest goals, getting those strong hands that can see the potential here. And understand, if you're looking for the criteria of what would look like of the next big copper project like could build, it's checking all the boxes.
So if I were an investor in your company, something I'd ask is, look, you have a $10 copper price projection, which we can walk through again. That's your timeline that's your target. You've given us a timeline in the interview that we did at Beaver Creek about a month ago. what needs to happen for Copper Giant to be ready to produce by the time copper gets to $10 an hour? Because I'd like to see you generate that beefy cash flow once we get double the price of copper, right? So what's your timeline there?
I think the right question is, of course, I need to get into a projection that
Yeah.
makes it a important acquisition, right? Make it something that adds accretive value to a major player, right? We're not building a project. We're looking at building a project that becomes the interest of institutionals, because you get in copper, you get into a problem where if it's 100 million, 200 million, you can build it yourself. Right, but there's very few. That's a really small copper project. Be significant, you're talking multiple billion-dollar type capex, which means you can only do that with a partner. And getting caught in between is not a really good space to be. So big is about making sure that it's an attractive project for a major. And so I would make an argument such as resolution going ahead in the United States is great news, perhaps. It's still not there, but it's almost there. But if it started constructing today, it'd be 7 years before it even produced. So you need a project that's near infrastructure, near surface, et cetera, which is what Macoa is. So it adds accretive value quickly to a major. So the idea is sell it when it's $10. That's the ideal situation, right? But my driver is more keep it on a pathway towards construction. And more right now, my biggest north of my compass is the upcoming elections, because I believe you're going to have a president come in. How can I stimulate the economy? How can I bring investment into my country? How can I create jobs, et cetera, et cetera? And I want to have a country building style project that can move the entire needle of the GDP by itself. A couple percentage points, because obviously Colombia is a robust economy in South America. But that's my biggest driver, and I think that it will align also with the overall supply demand gap. And talk about this. I think market gets it wrong a lot of times on what projects get built, and I had that explanation. If you look over the last 10 years, Cobre Panama, Mirador, a couple in Africa, and two in Peru. And if you look at it before Friedland was there, nobody was thinking that those projects could be built. Right. And when Cobre Panama came out, everybody was like, there's no way Inmet can build that. It's not going to happen. Way too big, too low grade, middle of the jungle. Mirador, are you kidding me? Ecuador in the middle of the Amazon jungle? Forget it. Right. Even Las Bambas in Peru, people were like, there's no way. And a lot of guys walked, and it ended up being MMG and the Chinese that ended up really putting that project into production. Right. It's market gets it wrong. Right. So I think that you have to have the perspective of what it takes. And normally what it takes is, right, making sure you can drive the political will, which is then based on having amazingly strong relationships on the ground. Right. That's why we're so proud of the news that just came out about our ability to create those relationships early in our project. And then the next is infrastructure. Right. If you're close to, you either need gigantic scale where it doesn't matter how much infrastructure you have to put into place, or you need to have amazing infrastructure in place. And then the other one is, how close to surface is it? Right. Does it take 7 years to develop a project and billions of dollars? That's pretty high risk. But if you can get something into production and get it to produce copper in a shorter period of time, that helps de-risk it. So infrastructure, and that's another one of the key advantages of Macoa. And I would add, it's a major non-NATO ally of the United States, which is just like Australia that the president just went to go visit, right? So that's also a huge advantage. The United States is building smelting capacity, not necessarily mining capacity. I think that they would like it to be both, but the biggest one is they want smelting. They want to have that refined copper capacity to drive production chains. And so that's what makes Macoa such an amazing candidate.
By the way, speaking of Friedland, Robert Friedland, mining mogul, he told the press a couple of years ago.
I told you so is what he said. What he said recently is, I told you so.
Well, sure. I wasn't quoting that, but that would make sense that he would say that, because he has correctly called this trend. He said in the past, he said that humanity must mine more copper in the next 20 years than we have in human history. In the last 10,000 years, basically, was the exact quote I heard on another channel, to meet surging global demand. Other researchers have come up with similar numbers. Researchers found between 2018 to 2050, the world will need to mine 115% more copper than has been mined in all human history. Well, it's one thing to make that projection, but it's one thing to actually make that happen. So if let's say investors, or not just investors, but the governments or industry who need, the Elon Musk of the world who need your copper were to come to you and say, hey, Ian, we need this copper like now, not in 15 years when we have maybe a mine. Like what needs to happen to expedite this process?
It's funny, David. The first thing you just mentioned is what can happen. It's like, sorry, guys, you're too late. You figure this out too late. Game over, right? But because it's existential, they'll find a way, right? And in the triangle of what is it? Quality, speed, and I forget what the last one is. But anyways, money can make things go a lot faster, right? But I think that is the biggest one. It needs to be incentivized. The commodity price and capital is the number one thing that's going to take to speed things up. And I've been saying it for a while, maybe a little bit too early, that the future is based on offtake with you have a vertical integration of businesses, which you haven't seen since the first production lines of the Model T, right? Where you had rubber plantations and iron mines to build a factory of cars. Right, we've globalized those production chains, and now we're seeing a deglobalization. So it makes sense. You're seeing technology companies now in the energy space, and I think you're going to see them very quickly in the mining space.
So your stock surged again 70% in a couple of weeks. What happened in the last couple of weeks? Did you have a new drilling result? Do you have any news to share with us?
I think the big one is obviously there's now the spotlight has moved now to copper. The whole space is getting a whole lot more attention, and then people see the narrative for copper. I think a lot of people, but not enough people. Now people are buying and can see that narrative. But we've also put out like a trifecta of great news. We put out amazingly improved metallurgical results, which especially for molybdenum point to an increased value for every ton you take out of the ground, right? If you've already got to mine it out and you get more value out of it, that the incredible recoveries we saw in Mali is a big win for the project. We put out great drill results demonstrating a third high grade zone within the project. High grade is important because it helps pay the bills in the beginning of a project. It helps make a more economic project in a startup. So hitting a third zone is big. And then the big news that we have come to, we finished our first finished the previous consultation process with Condagua, which is the First Nation closest to the project, and establish that partnership from the beginning. And people that really understand that this is a group that has autonomy, and their ability to say this is now our project, and so that helps protect the project from the very beginning and creates that relationship of co-development together. So it's a big de-risk for people that really know what it takes to build these mines, done at the exploration phase, which is the first time ever in the history of Colombia. And I'd even add, um, one of my directors who previously worked in Colombia goes, I can't believe how fast this happened. It took about 12 months, but for Colombia, that's extremely fast. It's also the first one that the government knew of where the company represented the company, and the First Nation represented the First Nation. So there wasn't in between. So we created that relationship from the very beginning, face to face, one on one. So it's been. I think that we've had to move. Now we really have an excuse to even make a bigger move based on this news.
So what's the next major milestone that we should watch for? In other words, let's say an investor were to say to you, great, we're in a bull rally. You've made your thesis clear. What needs to happen for you as a CEO to not only add shareholder value, but ensure that your company continues to add leverage to the copper price on its way to $10 an ounce?
So, David, I would argue first, we're already in that catalyst. We have already done the catalyst. We're now finally getting paid for those catalysts, getting this project restarted, putting out some of the best drill holes on the planet, showing we can develop that social license that's required to develop a reputation in country, which is another thing that we're doing and demonstrating. We're the highest ranked little exploration company compared to the big boys in Colombia, ranked by government officials. We're doing all the right things that in order that take to build a project, and now we're way undervalued at a 0.1, 0.2 cents per pound in the ground, where the next guys that that got their project at a higher valuation in a different market, when there was a little bit of wind, are trading for 1, 2, 3 cents per pound in the ground. So there's always already an argument. So my question is, what does it do to continue to go up that valuation chain? And for me, it's the next big stage is putting up a new resource estimate, an updated resource estimate showing that this thing is growing not a little bit, but in big steps, and then being pushing towards its preliminary economic assessment to show it's economic and get it on that timeline that you say. I want to make sure that this thing could be producing copper when it really makes a big difference. And so it's seeing that pathway, where our valuation is today, what is our base valuation is based upon, and to create a whole lot more value than it costs us to get there. Right. So that's what we're looking at today.
Roughly, and I know you don't have an answer, but roughly when can we expect a PEA?
My goal is to have one before, during, or immediately after we have a new president. So I mean, my goal, it might be ambitious, would be to get something done by August of next year. Is that time frame? It's a it's a goal right now. We need to get there, right? And the only way to we need to get more rigs running, more things and more activities going on the project. But I think we'll get there one way or another, right? My goal is to do it with the biggest resource possible, and we might have to do it while the resource is still growing, right? I mean, that might be the sacrifice that we have to go through.
We'll keep tabs then on your progress. So congrats again on a very successful third quarter, and let's see what the fourth quarter has in stock for us. We'll put the link down below so you can follow Copper Giant there. Thanks very much, Ian. Appreciate your time.
Thanks, David.
Thank you for watching. Don't forget to like and subscribe.